Hello, this is Dale. In this video, I want to share with you how my members just received 6 straight winning trades trading credit spreads. This is what I do for how I've made my money, what I do for a living, and I get a great deal of satisfaction out of teaching people how to profitably bring in consistent monthly profits using credit spreads as your vehicle to invest in the market. Last month, my members earned $441, and this was just on one contract, one credit spread contract per alert that I sent out. Okay, and there were 6 alerts sent out. They brought in $441, and this was just in 1 month. Now, many of my members trade 10, 15, 20 or more contracts. So you can see how the money can be brought in. And this was a good month, but not an abnormal month. I'll show you at the end my equity curve to show you how consistent the monthly returns have been. I've been sending out my alerts for the last 11 years publicly. I'd like you to become a member, so listen closely. I only use 3 indicators: measured moves, and this is basically looking at the trend, looking at higher highs, higher lows, and then lower lows, lower highs. Fibonacci extensions, which show me when I think it's about time that the trade has been overextended. It's maybe time to take profits. And then, of course, my best tool indicator is the regression channel. A measured move, on a bullish measured move, the price goes from A to B and then pulls back to C and then comes over here to B prime. That is a measured move to the upside. It's a higher low and a higher high. That's the classic definition of an uptrend: higher highs and higher lows. When you get a measured move, right here is a great time to get in to a trade. This is how I execute my entry. On the bearish side, it's just the opposite is true. The price goes from A to B, then pulls back up to C, and then comes down here and makes a lower low, makes a lower high and a lower low, and this is where we enter. Now, the regression channel is calculated by 50% of the price being above the regression line, 50% being below, and then you take plus or minus 1 standard deviation of that, plus or minus 2. What's beautiful about this regression channel is 95% of all prices will be contained within this channel. This just shows a typical bell-shaped curve showing that plus or minus 2 standard deviations, there are 95% of all prices contained within that. And this is a powerful tool. You can see when something is overbought and oversold. And what I like to do is I look, if I see that the stock price is overbought, then I'm keenly looking for it to revert back to the mean and make a measured move to the downside for my entry. Just the opposite is true if I see that the price is oversold. Now I'm looking for it to revert back to the mean. I'm looking for it to make a higher low and a higher high and then enter at that point. Vertical credit spreads give you a great advantage. First of all, you get great returns coupled with high probabilistic approach. The trades I usually put on are right around the 80% probability of success. This yields monthly income on a consistent basis. We are sellers of premium, so time is working in our favor. You don't have to constantly watch the market. You don't have to chart hawk. This is a low anxiety way of investing. And you're protected against loss because you're selling one out of the money, but then you're buying one further out of the money. So what I'd like to do is go over to, let me go ahead and get out of here and go over to my Thinkorswim and just show you an example of two of the trades that we just recently got out of that were very profitable. This is a chart of Apple. This is a daily chart of Apple. And what I'm looking for is a measured move. Now you see it came up here and this would have been point A, then it came up to B, and then it came down to C. And then right here, it made another B prime. That's where I entered. And then so that's our entry point right here. So when do we get out? Well, let's take a look at the Fibonacci's. We go from A to B, back down to C, and there's the 127. Bingo, that's where we wanted to get out, and that's where we took, let's see, my records show that we got 70% profit of margin on that trade alone. Now let's take a look at Google. Google was another one we profited handsomely from. Google, it made a measured move. Took a while for it to make a measured move. It made a measured move right here. And this was a monthly trade, so we set up a credit spread a month out, but we only held it for 2 days. You can see we got a big explosion off of that, all the way up to the 161 on the Fibonacci's. We took profit in 2 days, and that was well over 100% of margin. These are the kind of trades we do on a consistent basis. So let me go back over here to let me just go over to the website real quick. When you're a member, you'll have access to all the recordings that I do. We have a webinar, a live webinar every 2 weeks that I teach. Lasts about an hour, where we go over all the current trades, all the things that I see and why I did those. It's really a teaching webinar. If you scroll down here, this shows you the latest trades that I have made. Let's see, 1, 2, 3, 4, 5, 6. Yep. Started out with a profitable SPX trade and a Costco trade, a Visa trade, Apple, Google, Amazon, and SPX. I only follow a small market basket of stocks to teach this to people, but this strategy can be utilized on any stock, any ETF, any futures that has a price chart associated with it. So let me go back to the slideshow, and let me see if I can bring that back up. Hold on for a second. Let's see if I can do that. No, I can't. So what I'm going to do is I'm going to bring this over, and we'll just force our way through here. This shows the equity curve for the trades that I've made since, actually, this goes all the way back to 2019, currently all the way up to 2022. I haven't shown the updated curve. 2023, actually, if you just extend this out like this, that's what our equity curve has looked like for 2023. You can see that I do have losers. I do have losing streaks, but when you get an equity curve like this, where you're just going up in the positive direction, that's the kind of strategy you need to get a hold of, learn how to execute it, and you're gonna have that consistent monthly income for the rest of your life. Again, my name is Dale Brethauer. I've been trading for greater than 4 decades. Hedge fund manager. I've been a guest speaker at a number of institutions, written 3 financial books, and currently I give out my signals when I see a measured move, something that is coming back to the regression channel, back to the mean of the regression line. And these are usually, I've got a market basket of about 15 stocks. Like I said, this can be used for a lot of different stocks. This is go on a monthly basis. You pay on a month, and what I'd like you to all do is go to www.optionsinfinity.com and take a look at what I've got on the website. Try us. I think you're going to love it. It's a simple strategy. I like to keep things simple. This is something I've been doing for a long time, and I've taught thousands of people how to do this and how to invest in the market to bring in consistent cash flow month after month. Hope you enjoyed this video. Talk to you later. Bye-bye now.